Good afternoon. Today is Monday, June the 12th. The time right now in Singapore is 1:15 in the afternoon, and today is the start of a brand new week. And today is likely to be quiet because there is no major economic data that will be released today. However, tomorrow will be a different story. Tomorrow we have a slew of important numbers that will be released, starting off with the UK, in which we will be expecting the labor reports, including the unemployment rate. And then we have Germany inflation number in terms of their harmonized index of consumer prices. And of course, we will wrap up in the US with the CPI numbers. So that will be one day before the deliberation over the FOMC, which is the Federal Open Market Committee meeting, which will decide the Federal Reserve interest rate decision. So tomorrow we're going to have a slew of numbers, and it will probably cause market to be a lot more volatile than tonight. Okay, so basically let's go through the various products and see where the market will likely head. As we start off as usual with US equity index, we start off with the Dow Jones. Here what we are seeing here is a 4 hours time frame. You can see the Dow Jones actually managed to crawl into a marginal high on Friday. So we have 33,975.3 before it closed marginally weaker. But basically, we do have prices starting to recover from the lackluster performance in the bulk of last week as far as the Dow is concerned. So the prices is getting very, very close to the ideal selling price. Is to me will be 34,080 and 34,500 levels. So this level of prices does offer the incentive to go counter trend. As far as I'm concerned, to go short will be a lot more advantageous than to continue to buy as the market rally ever higher. So in the S&P 500, I also see the same thing. The prices is currently within a price which I think will be very attractive to sell. For those who are already long, maybe you want to take some money off the table. Friday, we see the price went up to 4,321.9, which is almost 4,322 levels. Now, this is the year high as far as the S&P 500 is concerned, and this put it very vulnerable to profit taking. So the first clue that I would like to see is a break and a close below the nearby support line here, represented by this dark black line here. So if the market do close below this level, that will be my first inkling that perhaps we'll be seeing the start of a more sustainable retracements. Okay, so do watch out. If we do see a retracement, the immediate target for me will be somewhere between 4,144 to 4,173. That will be the 50% pullback of this entire rally, starting from the April low of 4,049. Okay, over in the Nasdaq 100, I also feel that it is vulnerable to the downside. We have a test and a marginal break of the year high at 14,672.85 on Friday, which is marginally above the last Monday high. And that I've always maintained this bracket of prices, anything between 14,135 to 14,712 is going to be quite attractive for a counter trend pullback in terms of the rally that we have seen so far since the beginning of 2023. So if we do see a pullback again, similarly, I want to use this nearby support line represented by this black color line here to see if we do get a pullback. So if the market do close below this level here, that will give me the incentive to look for a selling opportunity on the rebound if after the initial decline. So immediate target will be around about 13,700 levels. Over in Asia, we are beginning to see the market is possibly has already peaked at 32,708.5 on last Wednesday. So we can see this is a 33-year high, and market is really struggling. We have a pullback back down to as low as 31,420 before we see the bounce back to 32,400 where we are currently at. So will the market pull back down again? I think there is a very good chance it will, and let's see whether this pans out. Okay, the immediate concern here will be this bottom here, which is a pivot low at 30,566. So once we get a price that close below here, that will be the first inkling that we could be seeing a sustainable, quite substantial decline in terms of correction. Over in the Hang Seng is vulnerable. We can see that the market has been struggling to go beyond this pivot line here, which I previously identified at 19,521 in the cash index. So today we have seen the market is very cautious near this line here. If it cannot sustain and pull back down, which it did in the morning itself, let's see whether this will result in the continuation of the decline from 22,700, and this time it will likely break the 18,000 towards my immediate target here at 17,000. So this is still a more than 1,000 points possible decline extension. Over in the mainland equity index in China, we can see that the price, this index here, the CSI 300, is struggling, but it has managed to hold the line at 3,780 thereabout. And we have done a very neat three-wave decline here, should technically means that the market has hit the bottom and is getting ready to rebound. But so far, the rebound has been very, very shallow. Now, that means the market probably will do something even bigger than the pullback to 3,777, okay, which you saw on last Thursday itself. So over in the energy market, we can see the energy markets are still coming off on the false report that we received that was flashed across the screen last Friday, in which the news was that Iran and US is moving closer to an agreement that will allow the Iran to sell crude oil amounting to 1 million barrels a day in exchange for Iran giving up their nuclear program. Obviously now, by now the market has already decided that it's a false news, and by now we have not seen the recovery in oil prices, which I think should begin anytime soon, because removing this piece of false news about the Iranian oil coming into the market, the last known fact is that the Saudi Arabia has decided to cut production on their own by 1 million barrels a day on top of what they have already agreed to cut among the OPEC Plus members in April 2 months back. And then, of course, last year before the year end, we have one announcement of production cut. So taking everything into consideration, it should be supportive of higher energy prices. Now, on top of that, we also have news that the US is starting to replenish their petroleum strategic reserve, which means that they'll be buying. So I think they will love to buy crude oil anything below $70. So let's see whether the $70 will provide a floor to this market as it tries to negotiate between the politics of how to control prices. Over in precious metal market, I think the market is still consolidating. So this morning we have a little bit of a pullback from 1,973.10 cents from the overnight high on Friday. So if we do get a little bit more pullback somewhere between 1,947 to 1,953, for example, then this could be a good base for the market to propel a bit higher. But by and large, this is basically a corrective move. At the most, I think we probably will see one hooray move to 1,989 to $2,000 thereabout. So let's see whether this actually pans out. But if in the event we have a major rally, then obviously we have to take another look at the structure itself. But for now, I think the market is just doing a corrective rebound from 1,932, maybe heading towards $1,990 per ounce. Okay. Over in the silver market, silver has a more structured recovery. We can see that there is a very neat three-wave that either looks complete or maybe there will be one more try. So let's see if the market will pull back enough to $23.84 to $24 for another rush towards $24.60 or even to as high as $24.90. That will be the ideal level target to aim for. But by and large, if you have not already bought, then maybe you just watch. Unless the market pull back to $24 and slightly lower, maybe that will offer one more buying opportunity. But in the meantime, if you are not comfortable chasing this market, then watch how the market unfolds over the course of the next few days. Over in the dollar itself, you can see dollar has been pulling back from a high of 104.62 in the dollar index. Now, the whole month of May, we can see the dollar index has been climbing from 152 all the way to 104.62. And then right now, what we are seeing is possibly a technical pullback, which may result in a three-wave structure here aiming for 102.55 to 103 level. So if the market do dip into this bracket of prices, it does offer a buying opportunity because the rally in the dollar is likely to resume from here beyond 104.62. So this could be a buying opportunity going into these 2 days trading activity. Over in the euro dollar, what we're seeing in the dollar index, we are seeing the exact opposite mirror image in the euro versus the dollar. So if the dollar continues to pull back, we also see the possibility of an extended three-wave rally towards a 108.10 to 108.45 in the euro dollar. So this does provide a selling opportunity as much as the dollar index present a buying opportunity. So do watch out for this level here, 108.10 to 108.45 for a selling opportunity, with the idea that the market will take out the 106.35 low as it goes lower. Okay, over in sterling, I think we are already very close to a inflection point, because we see a very clear three-wave rally here, targeting somewhere between 126 to 126.05 level. So this is a very, very small window of price. If the market go and test 126, I think that is as good as it can do, and then maybe look for a reversal pattern in a lower time frame to go short, because I think the market may actually come back and test the 123 level over time. Okay, over in the Aussie, we are also seeing something very similar. Aussie has actually rallied from 0.6460 all the way to 0.6750 on the back of a surprise the RBA, which is the Reserve Bank of Australia, surprise rate hikes over last week, and we can see the prices is already very near to my ideal selling price. The bracket between 0.6760 to 0.6780 is my ideal price to sell, and of course on condition that I do see a reversal pattern in the lower time frame as the prices move into this bracket of prices. So get ready to watch out for a selling possibility here. Over dollar Canadian, this has been one of the most sustained decline in the dollar versus the Canadian dollars, but I think the market may have hit a bottom, because from what we can see, we have a double bottom here, very, very neat. And if this level actually holds true, then maybe we can see a rally towards the 134.90 levels, or even the 135.25 levels. But obviously, I would love to buy at a much lower price. I will hope to see a rush down somewhere between 133 levels to actually fake a move to the downside, so that they can catch all these short seller on the blind side, and then before it reverses to the upside at 135. Okay, so that would be a perfect move if it ever happened. But do prepare to buy from now onwards in the dollar versus Canadian with an eye at 135 levels. Dollar yen is a bit of a disappointment. It does goes into a very tight consolidation range. I have actually gone short dollar versus the yen, but it looks like I may have to put my money elsewhere. If the price do come down a little bit, I'm just going to put my profit taking level at 138. Hopefully we can see a three-wave pullback before the dollar decides to rally one more time, very much like what we see in the dollar index. And this time the market will likely take out the 141 levels and perhaps even higher. So going short there right now is not a good idea. If you're not already short, try not to get involved in this currency pair. Perhaps if you want to, look for buying anywhere between 137.35 to 138 levels. Okay, but if you have not, then watch. Over in cryptocurrency, we know the drama that we saw last week as far as the US Security Commission suing both Binance and Coinbase has caused the market to gyrate. You can see the prices falls from just under 27,400 all the way to 25,400 before it kicked higher on the second announcement that the SEC has also sued Coinbase, and this caused prices to rally back to 27,356 before it come back down to earth. So by and large, there could possibly be further weakness going forward in the Bitcoin here, but again, the news that the SEC is now targeting the two biggest exchanges in the world is causing a little bit of unease among investors here. So do watch out, and maybe if you're not comfortable, maybe you just stay aside and watch the development as it unfolds. Okay, so do watch out for further losses, possible further losses in cryptos, and of course there's always the surprise move to the upside. But then again, I am not very I don't have a very clear view on the crypto market right now based on this new development. So there I have for you so far, and I will see you back tomorrow with a new update. Bye bye, take care.